Well, good afternoon, good morning, good evening, wherever you are. This is Steve Hill with AIQ Systems. This session is on Bollinger Band setups, variations, and trade timing. I'm going to start with a PowerPoint here and just a refresher on Bollinger Bands themselves and the different ways of using the bands for timing of trading entries. And then we'll go over into some live charts and have a look at some previous setups and also run through a few stocks and see what we can see coming up in just on the Dow 30 stocks. So first slide here. Getting a bit click happy. Bollinger Bands themselves are, the core idea is a moving average, a 20-day moving average, just an arithmetic moving average is used as the foundation. And then for the default settings, there are 2 standard deviations above, 2 standard deviations below that moving average, designed to give us an expanded view on volatility. What happens is that the bands get wider when volatility is wider and it contracts during quiet periods, and then quite often during the contraction it's prior to a change either in direction or an expansion of volatility again, which we know can lead to moves both up and down. 3 core ways of using it are breakouts from consolidation, and this happens a lot when the bands are wide and then they contract. The mean reversion setups, and pretty much this is the jumping outside the upper or lower band, and there has to be even a pretty bold move outside those bands before we get a change in direction. So that's a different way from using them than using it as a squeeze, which is really what the consolidation is. And then there's trends that ride the band. So it rides the band up or down. And this can be on one side or the other side of the band, but it has to be fairly close to the band itself. So those are the 3 things that we look at for Bollinger Bands. First one, probably the most popular one and the most widely watched for, is the squeeze. Bands tighten before an explosive move. The breakout comes, the bands tend to then start just immediately after one of them turns around, the band changes direction. So if it's the upper band, it'll be coming down, the lower band will be coming up. They're getting closer and closer together. Price action is sort of squeezed in between the bands themselves. Tendency to get a reversal. It sort of shoots outside either the band itself sometimes, or you can time it using an indicator like an MACD to give you an idea of which direction the squeeze is going to take us. So the Bollinger Band squeeze is the first one, most popular, most well known, I would say. Spots the low volatility coil before price breaks out. And I use combination with MACD, which often happens, just prior to the squeeze being completed, and you'll get a move to the upside or the downside. The MACD gives us that confirmation with direction. It crosses over for the upside or crosses over to the downside on the signal line for our confirmation on that. If you don't get that, then this isn't really working. More often than not, you do get that happening because the foundation, obviously, of the Bollinger Bands is a moving average anyway, as is the MACD. Of course, the difference with the MACD is we're using exponential smooth moving averages rather than the arithmetic 2 standard deviation moving average in the Bollinger Band. That's the first one. We'll look at some examples of that. Second one here is breakout trend. Basically, you're walking the bands, whether up or down. It hugs or rides the outer Bollinger Band, both directions. Often this is mistaken for overbought or oversold. And we'll see, what is an oversold and overbought based upon other indicators rather than what is actually a momentum move when it rides up on the band. And you can most often see the difference between the 2. So how do we trade this? When it's wandering up the upper band or the lower band, you buy long when the price goes above and stays above the 20-period MA, which it will do for a sustained period. And the reverse is true, of course, on the downside. And you can also get re-entry points or even take money off the table as it pulls back to the MA band. So there's a definite way of seeing that. You see that happening, especially when it's in a trend. The third method, of course, is the big breakout. Price closes above the upper band or below the lower band, snaps back. And it's, when it's in a statistically overbought or oversold area, this tends to happen. And quite often the price will come back down to the MA. And that's a short-term trade from that blowout above or below the band. Alternatively, you can look at it this way. Look for the RSI oversold or overbought to give us an idea of how powerful this breakout is. The breakout to the up or below band, and how powerful it is to see if it is an overbought or oversold situation before making an entry. So that's the 3, really. You've got the squeeze, you've got following the trend band up or the lower band, and then you've got the reversion trade where it breaks out usually much stronger breakout through the band, and that gives us a clue for a change in direction. So let's pop out of this and we'll get a chart up on the screen here, bring up our AIQ, bring in the charting area right here. I've got the Dow 30 actually already in here. And what we're going to do is go through just these stocks here and look at some of the setups that are in here. So as you may already see, I've got the data updated through last night's close. I have already put on here upper and lower Bollinger Bands so it comes up with every chart for our convenience. I've changed the default setting on the short-term moving average from 21 to 20. Just double click the indicator to change that value. So here's upper band, here's the lower band, here's our MA, which is crucial for some of the action that we'll look at within the price charts themselves. So let's start with the squeeze actually. I'm just going to run through a couple of examples here, and so you can see what the squeeze really looks like. So we've had a couple of good ones recently. The squeeze itself, remember both bands are actually, you're looking at the bands narrowing and coming together, especially after a consolidation period. Caterpillar here so first off, what are we looking at here? We are looking at, and this is the best examples, a consolidation period, right? So this is almost a whole month. Notice the volatility, the bands are fairly wide during this whole month of May. And then the narrowing has been going on quite dramatically in the last sort of part of May and into early June. So the critical key off point here, and this is the best way to do this, is just change the date back to that point. The squeeze is beginning. You can see it beginning here. Now, when it's begun, we get to the point here where the turnaround, where it stops the narrowing of the bands, the squeeze is kind of over. You see the bands sort of flattening out and moving the other way. That's our pivotal point here. That the squeeze and there's some sort of determination is about to happen. Volatility is just faded away. At that same time, this range looks like it's just about to be broken out. And to confirm what direction this is likely to go, we look at MACD indicator. And when we put on the MACD, we're looking for this to cross over to the upside. And that does happen, right at this point right here. So this is our clue. We have the squeezing of the bands has occurred. There's an MACD. There's our crossover to the upside. That's the key off point right there. You've got the Bollinger Band squeeze. You've got the MACD to confirm the direction. And from that point on, we're looking for price action to start moving away. As you can see, it does in a sort of relatively quiet pattern for a while before continuing up. Notice what's happened here. This is our second type of move here. Notice what's going on here. The band is right behind the price action there. So this squeeze was a good squeeze. We got a good squeeze here. We got the trade off here. It took a few days for the trade to get going, and now it's following that band up. We could have exited up here, for a pretty nice gain in the region of about the 350, 360 to the 390 level. So that's a pretty good 10% gain on that move. Exiting again, I'm a big fan of trading stops. Not exiting on indicators particularly. It's just, that's my preferred exiting strategy. This Caterpillar chart also has the opposite side for us, quite nicely demonstrated here. So remember the squeeze, we look for the bands coming together. This was less obvious on this, although the bands have been contracting in this period here. It's kind of flattened out a bit from this consolidation period here. The squeeze kind of gets going here. The MACD cuts down here, gives us our direction. And from there, price action moves down. So again, it's been volatility is good. Well, not great here, it's doing okay, it's going down. Things start to settle down here, the squeeze happens, the bands are coming closer together. Not as obvious as the squeezing on the bands here, but it is the same type of pattern. An entry point again. Once the bands start to turn around, which they do about here, started to go back down or widen at this point. I should take these off of here. So in this case here, the bands have started to widen at this point here after they've been narrowing during this period here. And that's really the entry point to go short was around about here. You'd probably sat around for a little bit here before things took off to the downside. And in this case here, this is one of those reversion points down there. Look how big the blowout is through the bands when that happens. It's quite common to see that. And we'll look at this again later when we look at the reversion when we get the blowout through the bands. So another great example in the squeeze there. Let's go and have a quick look at one more squeeze that we looked at earlier here. Yeah, and by the way, I had this session for our UK clients earlier today. Wanted to look at this one here because this was a really, really wide range on Chevron, and we had the squeeze going on here. It's still going on here. The key thing to look out here is watch what happens here. The squeeze sort of just falls apart. What's happened is we got to this point here. This would be considered, say, the squeeze point I would say, around about here. There's the squeeze point has come in right here, but almost immediately, what's happened here is the squeeze has sort of broken apart from there. Almost immediately we get to here, and this has started to go back out. And this one's kind of flattened out a little bit. So this one's not as clear, there's not so much clarity on this one. And then we go on a little bit further, and it squeezes again. Then you get the real squeezes right here, but this one was really, really short term. So the squeeze has occurred. The MACD has already crossed over back here, so your entry is going to be around about here. You might have played this for a few points to the upside before this thing flattened out and didn't do a great deal. As you can see here, it came back to the MA band, so it's popped up. There's the squeeze, got a very small gain on that. Came back to the MA band there. If it breaks through, then that trade was definitely a fail. You might have been popped out here for a small loss based upon some money management techniques, but so not 100%, but it's always worth noting that the squeeze itself, it works better after a consolidation, and this was a consolidation again. The price action was consolidated in here. That's the best time for the squeeze to take place. In this case, it wasn't a great one. The second one, which is, one I've never really used a great deal, which is the running along the band itself. And I wanted to show that actually this stock actually has a good example in here, back here. We looked at this earlier too. Price actions kind of, this is not really a squeeze because it doesn't have that dramatic squeeze look to it. But what it does have is a fairly orderly retreat. When you're on this date here, I change back to here, on the right-hand side of the screen here, there's nothing here that tells me much. Maybe it's broken below the lower band, so that just tells me one thing. But when I get into like here, you get into this type of period here, you are definitely trading along the band itself. And the only way to know if this is still going to be valid for us is to have a look at something like RSI Wilder. As long as we're not deeply oversold, we're still good to follow this. So this is kind of you're driving your trade into a trend that's already in place. So you could have just followed this. You see how it's just following along the band here, a little bit outside, a little bit inside, a little bit outside, a little bit inside. This trade's good. It keeps going. I mean, it just keeps going. Your first alarm bell, or first time to take any money off or cover a short on this would be here when RSI Wilder is now deeply oversold. That's not necessarily the end of the trade, but it is a warning sign. At this point here, you might have taken some of this money off the table. It's a great move. I mean, assuming you got in somewhere around 151, you're already down to 140 in just a few days. That's a great move. From here, of course, things are sort of bottoming out. You could definitely say this trade is over when you get to here. This has moved away from hugging the line, right? In fact, this one here, this sort of hammer here, might be considered the time to get away from this trade. But you can see how that hugs the line. You needed 2 or 3 days of it hugging the line before you can be sure that there's room in here for it to make a move. So that's an interesting pattern there. I've got a couple more examples of this. Let me just go back up to Amgen. And just move that over here. Yeah, there was one. This was the one we looked at earlier again over on Amgen. So this one, again, it hugs along the line up here. So if you change the date back to here, your first indication that this is likely to hug the line and the upper band is around about here. It's already hugging the line, 1, 2, 3. Entry around this is a sort of open area of 285 or so. And again, you stay with it while it still hugs the band. The trouble is, once you get really far away, this point here, it's kind of moved away from the band itself. The trade will be over. But in this case, it kept on going. So you might have taken some money off the table or use money management techniques with a trading stop. You would have stayed in this position until this thing moves away completely from here. So in a situation like this where you might be in at 286, you're going to make maybe 4 or 5 points, not a huge gain on that one. The other example was over here on Amgen. I like this one back in the early part of the year. Change the date over there so we can see this. Right here, there's no indication that we're going to be doing a follow the band, but then we get 1, 2, 3, and again, the band, remember the band's got to be, I didn't mention this, the band's got to be going up. The upper band's got to be going up for this to work. So you might be in there at around about 273. And again, you just look how it follows the band, keeps following it, keeps on going, still close to the band, still close enough for us, still close. Big blowout there. It's a bit of a warning. You know why? Because we've got the RSI Wilder here that says overbought territory. Then it might be a warning to take some money off the table or take half off the table and just let it keep going while it's still hugging that band. Now here, that's moved away. Look how this has moved away. So this move is over. Even if you'd stayed in all the way through to this sort of point here, 297, you've made a good 20-point gain on this stock. So it's pretty good going over a 10-day period. Again, that's hugging the band. And you still got to wait for 2 or 3 days before you can see that being in place. Now, the third one is that blowout. When it blows through the band upside or to the downside, the degree and the scale of it and the way this happens can be traded in 2 ways. Number one, look at this breakout here is not significant, right? This one here is a little better, but still not great. This one's really good. This is a real big breakout. This is the reversion one where you think, well, yeah, it's going to break out here. It's time to go short. I'm in overbought territory. Definitely, as soon as I cross back into the center between the 70 and 30 line on the RSI Wilder, this is time to go short on this stock. I've got to be cognizant of the MA band there. So this goes down to here. We'll keep going on down, and you can see it right here. But on this stock, not a lot happens for a couple of days, but you're still short, hanging in there. Watched it come down to the moving average band there. Got to be aware there could be a bounce off there, and yes, there was. So this is the thing, is very, very nimble traders can probably glean a few points off of this. But this is actually turns into a re-entry point because it bounces off of the MA line itself. I mean, everybody saw that bounce off there. And it popped back up, and then it's back onto the line there for a little bit. It blows its way right out again before it comes back in. Very hard to be able to short that one. This one's really just kind of keeps on popping out, popped out really high again. This is no longer, this is not considered hugging the line. This is far too volatile around the line itself. So blowouts, very short, nimble trades coming back inside like that. Let's have a quick look at another stock here. It's got one of the blowouts in here. By the way, that was, this American Express had a great, this is hugging the line again. Look at that. It's a great one. I digress, but hugging the line there. It's over here. You're moving away from the line, you're done with it, right? It's over. Hugging the line here, much shorter term, but still, you can get a few points out of that. I'm just looking for the blowouts that we looked at earlier here. Yeah, so this stock, Caterpillar's pretty good on this for blowouts, actually. This one has one up here, big blowout up here. RSI Wilder was just on the overbought side. So, sorry, the overbought side line itself, and then, price action moved back down, cut through the moving average. You'd have been out with a trading stop here. So you might have got in on this bar here at around 409 short. Once you got to maybe here at 382, it's over. That's not bad. I mean, that's at 27 points on a $380 stock, 4 or 5%. Second one here is we've got a similar type of thing going on with the blowout down at the bottom here in March. This is a nice big blowout to the downside. It then cuts right back through, and not for many days though. I mean, again, the problem here is that we did have oversold area right here, and then it cut back through. So you'd have been in, but again, you'd have probably traded this from a 330 level, 330 level, and you'd have been stopped out around 342. Not a great looking chart. Moving forward a little bit to the other part on Caterpillar. This was, of course, that big blowout down here that came back through. Let's just have another quick look at another stock before we look at some more current examples. Just looking for that really good blowout. So this one was a big one down here. So notice this one. This is interesting on Goldman Sachs, because this is the first big blowout right here, right? It's blown right through the lower band. I mean, real gap down. Here's the second one right here. So you've got 2 big blowouts to the downside here. That's a sure sign there's going to be reversal because the RSI is in oversold territory. Next day, I mean, this bar is just huge. I mean, so you would probably have gone long even in the mid-range here at 483. And this was a really nice measured move up. I mean, if you're trading stop on this, nothing's going to blow you out unless you're somebody who plays really tight stops for quite a while. After a little while here, you're in, the trend from here to here is pretty good. You could have followed this up. It follows the upper Bollinger Band for a while, pulls back again. Look how it pulls back to the MA right here. It happens quite a lot. Pulls up again, pulls back to the MA, and just floats above the MA. So, if your risk aversion is just fairly modest, then you still stay with this stock all the way up until you got maybe up to here. You might have oh, okay, it's flattening out. But even then, it's still been great all the way from down at this level here. 474. We're now up into the 700 range. So this blowout here, this is a great one, a great example of the Bollinger Bands, together with the RSI Wilder showing oversold. A couple more here. I mean, blowouts down here, just you can see clearly when they're far away from the bands. Some of them work well. This one wasn't great. This one was particularly good. But let's have a look at some current setups just to finish off this session today. So we'll start with Apple. It's in a trading range. So the classic trading range that was with Apple kind of You got this level here and you got this level here. It's in a pretty good trading range there. We haven't really got a great indication of anything happening. There is a squeeze going on here. There is a bit of a squeeze. But with the squeeze, we look for the MACD to do a crossover to give us any idea of what's going on. The only crossover was back here, and so it's a little before the squeeze. And this squeeze is definitely to the downside. Look at the crossover there. This is to the downside. And yeah, you could have traded for a few days and you got hurt here. But the earnings just blew out from there. So not a great trade, but worth being aware of the limitations of what can happen. I like Amgen here. Look at this one. We've got this blowout in Amgen all the way through the lower band here. Remember, with the blowouts like this, we use the RSI Wilder to give us an idea. It's not in oversold territory, so there is possibility this might have a little bit more downside today before it would be an opportunity. Once it cuts back through the band, it'll be a good play to go long. But this is a classic blowout right here. And you can see in similar, in similar circumstances where it's blown through, there's a little room to move to the upside for a nimble trading. But once it goes into oversold territory, it's probably a good time if we're looking to go long on that one. Don't like the gaps on this one. I mean, it's come down to the lower band, not really telling us anything on it. Same here. This is a pretty good blowout. Again, it's not in oversold territory yet, so not too interested in that. This one, Boeing, yeah, not a lot going on there. Looks kind of like a squeeze, but it's not a very big squeeze and not a consolidation squeeze, which is what we look for. Caterpillar, of course, been riding that band for a while. Not a lot going on here. Possible re-entry again, bouncing off of the MA here. If it hits the MA and moves up, you're going to ride the trend. Salesforce, interesting one here. So this is 1, 2, 3, 4 days along the band here. Short opportunities trading the lower band here. Still, within neutral territory on the overbought, oversold. So there's room for this to go down. By the way, bear in mind some of the support down here. That's your 230 recent low. So an entry here around the 245 level. Got about 15 points to the downside before you meet that prior low. Not a lot going on this one. Let's go. Again, this is real consolidation on something like Chevron here. Not a lot. There's not a lot of information out there of what's going on with this stock as far as Bollinger Bands are concerned. Disney, that blowout yesterday, well below the bands here. It's still not down in oversold territory. So there's room either for this to do one of two things. It's going to keep moving down with the band over the next few days, or it'll cut back through for a buying opportunity. If it's a buying opportunity, we'll know pretty soon when it cuts back through the band. So right now, we don't know the direction on that one. Yeah, Dow followed the bands down here after 3 days. Could have made a nice short move following the band down here. Got into oversold territory here, so it's kind of flattening out. We might have missed the move on that one. This may move away. Goldman Sachs, we said, we're already been riding the band up here quite nicely for a while there. Then it moved away, back, started riding the band here, moved back to the MA, bounced off of there, but nothing to give us an idea of what to do on that one at the moment. Home Depot, yeah, it kind of looks like it's beginning to ride the band, but look at it to the previous resistance level here, so that's probably not going to give us much information as far as an opportunity. Honeywell, yeah, not a lot going on there. Same with IBM. Oh, I bounced right by Intel. Intel neither. With these gaps down, I mean, doesn't tell us a great deal for any of the Bollinger Bands. These are all, bands are widening out. There's no giant blowout here, so we don't get a huge amount of information on whether that's a buying opportunity. Nothing on Johnson & Johnson. A bit of a squeeze happened here, not a major looking one, but prices did move up modestly. Coca-Cola, not a lot going on there either. It's in a consolidation area. McDonald's has had a blowout to the upside here. That's a pretty good blowout. Still a little more room on the overbought side here. But this could be a potential move back down. It's blown for the bands. The bands are moving up, so it could move back inside. You go all in once it cuts through the MA itself. 3M, yeah, not a lot happening there. Same with Merck. Microsoft, I didn't look at this example for the following the band. Look at that following the upper band there. Everywhere from here onwards, upwards was just great. All the way from this point, you could say around about here at the 466 level up to all the way up to here, even it's 535 is good. This is a blowout. It's in overbought territory. This is a possible shorting opportunity. Already done a little bit of moving back to the downside. So beware of, the MA. If these are both all going up, still if it hits the MA, it may bounce off of it again. If goes through it, it'll be even better shorting opportunity. Nike, yeah, this stock's not particularly good. This, small pop out here. This is almost a squeeze, but it's didn't last very long to the downside. The MACD gave us the clue that it was going to be a turn down right here, but didn't last that long. Nothing much happening now, just wandering along the moving average itself. Procter & Gamble, not a lot going on there for us as far as an idea on using Bollinger Bands. Travelers, nope, again, same thing. We're not getting a lot of information there. United Healthcare Group. Let's see here. We have it traveling down the band here, which is quite interesting. You just zoom in on that a little bit. It's sometimes harder to see. This travel down the band here, because of this large move down in this period here, it's harder to see, but this has been traveling along the lower band. Give me a second here. I will do this. Yeah, nice. So it started traveling along the band here. Moved away a little bit. You've probably been out, started moving on the band again. Kind of a blowout here, but not really a significance. And for the current trend on this stock, it's not really telling us a great deal. I think that's the last one we have in here. Oh no, there is more. Goodness, I'm getting carried away here. The next one is Verizon. So this is definitely hugging the band. The band's going down. Yeah, this is still a good shorting opportunity. How do we tell if it's good? We look for RSY Wilder. It's not in oversold territory yet, so there's still room for this to go down. That's another shorting opportunity on the Bollinger Bands there. Verizon. What was that last one? The last one was, Visa, yes. Verizon, not a lot happening there at the moment. The very last one in here is Walmart. Great blowout to the upside here, just blew its way out. This is one to keep an eye on because the RSI Wilder is in overbought territory. So if this cuts back through the band itself, it could be a good shorting. So that's it, the three things really. We look for the squeeze, we look for the hugging the line, whether to the upside or the downside to buy into a trend, and of course the reversion when it's a big blowout. Waiting for it to come back through the line there is a good opportunity to go short along. So that's it for this session, and we'll talk to you next time.